from Secret, a channel for learning about trading and investing. Welcome to Quick Market Analysis for tomorrow, April 27th, Thursday, and expiry day 2023. Actually, the first expiry of the new financial year of 23. Right. So if you're not subscribed, subscribe and share to friends. Thanks, and let's get in the charts here. Nifty is showing green bullish. That's the third day of green that you see. Seems like it's almost breaking out of that trend line channel, right? And the momentum also has picked up. In the case of Nifty, it has climbed comfortably above the RSI 60. And look at the candlesticks of the Banknifty. It's wide range bullish. It's almost an engulfing bullish engulfing pattern, extremely bullish. And you have a third day of up move that's happening in the Banknifty also. Momentum is kicking up, rising. That also seems to be breaking out the new trend line, parallel channel, right? And seems to be having a breakout almost very close to 43,000 on the Banknifty and comfortably above 17,800 a day before the expiry. Let's get into factors in favor of the bulls. We have a third day of up move that's bullish by itself after 5 days of consolidating and retracing in between a rally that is about to take out previous correction of 9 to 12%. And this is all happening somewhere in the midway. And price action wise, we have taken out the lower high pattern in the short term, and then a bullish hammer is what you see, and a wide range bullish engulfing pattern is what you see on the Banknifty, right? So intraday it was very small dip initially on the bottom dice, and after that it was trending up. So the trend line channel breakout seems to have happened, and momentum indicators RSI is bullish above the RSI 60 on short term. Trend indicator ADX is bullish on both time frames and both indices. The moving averages are down there, 20, 50, 100, 200, all down there. It's all conquer long back. Bollinger Bands are in the expansion mode on the upside with bullish bias of price greater than the median of the bands. Open interest is having a long build up on both indices, and open interest of the options PCR is bullish about 1.12 like that, both indices. The VIX has spiked slightly in spite of the fact that the market has also moved up, which is a little divergent, but it is just 1%, and market remains to be in the low volatility regime with less fear and greed is in the market's 11.65. Except the IT, all the other major sectors, industrial sectors, FMCG, pharma sector, realty, auto, all of these are bullish momentum. Metal is maintaining the sideways and rising up. When you consider the industrial heavyweights, the major index heavyweights like ICICI, Kodak Bank, and HDFC, they're all in short-term bullishness. They maintain that momentum short-term, while the HDFC Bank just slipped into the sideways slightly other day, and the Reliance and the TCS, they all maintain the sideways momentum. So all these stock that's a heavyweight, and that's in the responses in the short term is the Infosys, obviously because of the results that gone bad, which has pulled the IT and dragging the index as well. So some of the factors in favor of the bulls and what's in favor of the bears. Remember in the weekly analysis we had a bearish engulfing weekly candle, and weekly bearish engulfs are often very powerful, especially in the medium time frames. So we never know it's going to work out in the next few days or not. Right? So we have to be cautious on that factor. And the bull trap also was found on the previous weekly charts of the Banknifty. So that's something to be cautious about. All patterns do not work all the time, but we have to keep that in mind that this will be clear only on Friday, and the next weekly candle will be closed. Remember, we had 11% to 12% of correction that happened, and we are in the midway. We have only corrected 6 to 10% from the earlier retracement, and we had 4 red candles, which is quite unusual. And then it's also unusual that the 5th month also continue to be red. So that's a hope for the bulls, but we have to keep that 4 red candles in mind, and that we have not fully retraced from where we had pulled back from. The Fyers selling continues since multiple years now, last 2 years, and even the 2023 also was big selling, and last 7 days they're selling. Today's information has probably not come out, But otherwise, even in a green day of extra also, it was a higher selling. So institutions not participating is a worry. This market is having some trouble. It's on the top, but it's on the same condition zones where huge resistance came. So it doesn't liquid, and it has been attempting multiple weeks. They're staying there and trying to break out. Simply does not happen, and then there is weakness across all the three indices, major ones, the S&P 500. Dow Jones was down yesterday, and even the Nasdaq is also facing selling pressure. Crude oils about the 76, 77 kind of levels is what it is. It has spiked up earlier weeks, and there is a fear that it can further go up to the top of the trendline channel. And another thing is the rupee is still weak, and it's very close to the 82, even though some call has happened, the currency pair as well as the dollar index. But it's still not ready to cool off that. It's still very close to the weakest points. So that's a worry along with the crude. You know. And the gold is also spiking up, and it's not ready to give up and go down. It has retraced and felt the heat of resistance, and it's doing another round of breakouts. When the gold is breaking out, you have to be cautious with the fact that people may be shifting their assets to safer havens, and that could be some anticipation of a probable crackdown. So you have to be cautious when the gold is spiking. So that's about commodities, crude oil, currency, and the gold. So IT sector is dragging, and it's in the bear zone. So sector in the bear zones, and it's dragging the index as well. Index is not able to break out and do a rally. No. Just because of the two IT stocks, Infy and the TCS. TCS has picked up, but Infy still remains in the bear zones. And we have a monthly expiry that's there tomorrow, so volatility could be coming in the markets, right? And immediate momentum, if you look at, it's still in the sideways zones, not in the bullish zones. We have the short-term time frames. The momentum is a indicator we talk about. So there it is bullish, but in the weekly charts, it's not moved up to the bullish zones yet. So as a bear, these are all things in favor of them. All right, so let's just try to summarize quickly what do we expect for tomorrow, an expiry day tomorrow. So we had, what we had was a third day of up mode after 5 days of retracement or consolidating that happened, and then it seems like we are breaking out and continuing the rally with strong banking index, normally the trend, and that's both are in the favor. So the bulls on for short term, and 17,800 and breaking out of the trend line channel is once again making price action also in favor of the bulls. With the Bollinger Bands is expanding, the bullish open interest on the options data and the call ratios, and the long build-up that you see on the futures open interest, the VIX being in the lower regime in the US indices at a crucial sort of breakout on to, even though it's facing some resistance, right? Overall, it gives us signals that it can move further up as long as it's 17,500 and the 40,000 is held, right? So the market view remains mild bullish for tomorrow as well. The monthly expiry, the volatility could come in tomorrow, more than the weekly expiry could easily be, and 17,700 to 7,900 would be the levels for the Nifty, and 40,500, 43,000 would be for the Banknifty. The stiff resistances before the 18K would be taken out. There's got multiple previous resistance swing highs and all there, but once it is cleared again up to 18,300, 265 to be exact. So there would be resistance there as well. So 43,000, 43,600 the levels for the Banknifty. 16,650, 16,750, 38,600 and 37,400. These are the medium term on a weekly basis, weekly chart basis, or medium term levels of swing highs and swing lows. Keep that in mind. Tomorrow's levels I already explained earlier. So that's my view. My bullishness tomorrow continues. I'll be cautious with the expiry factor. Play it safe. Alright. How to play is, if you're non-direction trader, just have to sell this 17,700 and 7,900 and then sit tight, penny stocks, make some money as long as you have capacity to add number of lots. Same with Banknifty also. Or else you can have the hero or zero where you buy the ATM and then hope it flies. Or if it's flat, no direction works better, right? Time decay benefit. So whichever way, have the capital protected, push in size according to the big spikes, and as per your capacity and as per how the market volatility is there, right? So play it safe, and if you're not subscribed and then watching this, please subscribe right away and share it to your friends as well. If you're subscribed, please like, comment, and share it to your friends. We have very few subscriptions and appreciate your help as well. If you want to avail the Telegram services, check the link in the description. You can do that. Right, thanks for watching. Happy trading, happy learning. Bye bye.